Hey, it's so late, and this is episode 8 of Red Pilled Orange Pill Investor. And I know that I generally preach, I've been saying sell for at least 1% premium. You can buy a share every week, but there's plenty of stocks where you can get 2%, 3%, and MicroStrategy is one. So you can see that I sold on Friday, for this upcoming Friday, the 670 call, own 100 shares, and sold it for, what was it, 22? Yeah, 23.25. And the price was like, I don't know, 650 or something. And I could have bought close to 4 shares, but MicroStrategy is pretty much, I think it's 52-week highs. So it's not that you have to buy these shares immediately, like every Friday. As soon as you sell the call, then you buy the shares, and you can see that MicroStrategy has retreated in price 10%. So now I could get 4 shares instead of 3. Is that right? 2,400? Yeah. Or just keep some cash, and maybe it'll fall more, and keep a little bit of cash in reserve for the next time that the price goes over your strike that you pick, and you actually have to buy it back for more than you sold it for. That's always possible as well. It's just another way of making sure that you're buying low and selling high. I think did I pick up a couple shares of, I forget what I picked up this week. But in my other account, I did pick up a couple of shares of MicroStrategy, since it was 15% off its recent highs. Little things like that I'll do midweek, because 90% of my trades are on Friday. I just closed last week's trades and open up new ones for the following week. I watched somebody's covered call video this week, and they were pretty much using, I call it the tasty trade strategy because that's where I saw it the most. But they did some studies that showed that going out 45 days was the the perfect window, because in the 2 to 3 weeks from 45 days to approximately 25 days, you can get 50% of the profit, and then you can just put out another covered call 45 days out. Now that only works if there is a date that's that close, so you'd have to do it on like a Wednesday to get exactly 45 days, I think. And let's just see how well that works out. And I think they usually go to around, is it 2 SD? They go around at like 2 standard deviations, which ends up being around 80% chance of profit. So they might do the 700-ish. It's not a lot of volume or open interest out here, though. So for MicroStrategy, I don't know if this is as viable as it would be with like a Tesla or something else that trades with more volume. It's a huge bid-ask spread right here. But their claim would be that you could get half of this in like 2 to 3 weeks. So let's just see what would happen. If we look at the 700 strike, 21 days, so it would be like 25 days right here. So 1, 2, 3. The 700 strike is 24.50. I already forgot what it was over here. 24.50. And 35.08. So that's not really the case here. That's only getting about $10 You have to buy this back for 25, and then you'd have to go out another 3 weeks. And sell it again. So yeah, I just prefer to sell weeklies. There's a whole okay, and the reason why they say to do that is just like what I was saying. So supposedly, on average, you're supposed to be able to collect 50% of the premium in just 3 weeks, and then 2 to 3 weeks, and not have to keep this call on for the whole 45 days. However, I prefer to just go week to week, and a lot of times there will be a good amount of premium that doesn't really collapse until that Friday morning when you kind of really know what the price is going to be that day. So there's not a whole lot of opportunities to close these early. But this is the call that I placed. Yeah, and I just do that every week. Take a look at stuff, Mara. Got a little bit of a chest cold. Yeah, 229 strikes, 227.5 strikes. And so I was a little bit more greedy with the premium on these two. Jeez. And so I have 400 shares of Mara. And, I could have done one strike here, one here, one here, one here. Or just done all 4 of them at the 28, or all 4 at the 29. Just whatever you like. Because anytime Bitcoin shoots up, the price of these mining stocks can also shoot up. Oh, that's what I wanted to talk about, MicroStrategies. So Bitcoin went down to about 15,000. And MicroStrategy bottomed out at 140-ish. So MicroStrategy has gone up 4x. And up, last week it was up even, 4.5 maybe. And Bitcoin in that same time has tripled. So MicroStrategy has quadrupled, but Bitcoin has tripled. If Plan B's stock-to-flow model holds, and Bitcoin in October 2025, somewhere in 2025 ends up at 500,000, that's like a 10-fold increase from where it is now. So does that mean MicroStrategy could potentially go up like 12-fold? So 10 times 600 would be 6,000. And then they're 12. So 7,200 in October 2025. Could MicroStrategy be 7,200? Would they have to stock split by then, or would they just let it be? And that's the other beauty of selling these covered calls, because even if you, if you bought MicroStrategy over here, let's say you were amazing, you just called the bottom and you bought this for 140. You've been selling covered calls all the way, here. You definitely made money selling here, and you were able to pick up some more MicroStrategy here. But then maybe you're not really collecting much premium because it might be going over your strike price here. You probably pick up a few shares here. You're probably not picking up shares here, but picking up some shares here. And where you were getting a couple of percent premium when you bought it at 140, now that it's 600, you're getting 1%. And even if you only get 1 or 2% based on the 600, it's 4 times as expensive as what you were getting here. So 1%, 2% of 600 is 12. Which is like 10% almost compared to your original investment. So as the price of the stock grows, your weekly ROI related to the stock price, it doesn't change. It's always going to be 1 to 5%-ish. But if you bought way down here, like for example, so I sold it for like 2,300, right? Which was 3 to 4%, 3 to 4% based on its current price, but my average cost is actually 447. So that's closer to like 5% ROI based on how much I actually paid for these shares. So that's the beauty of owning these shares forever, is the premium that you can get as a percent pretty much remains the same based on its current stock price. But if MicroStrategy is worth $7,200 in October 2025, and I only paid $450 for these shares, and I sell a covered call at $7,000 for 1%, that's $700. Does it make up shit? $7,000. Yeah. That's actually $7,000 a share. 100 shares would be worth $700,000? Okay. Am I losing my mind? These 100 shares of MicroStrategy are worth 60 grand. Times 10, yeah. If these things are worth $700,000 in 2025, and I'm getting 1% premium on them a week, that's $7 grand a week. And I'm only putting in, I only paid $450 a share for them. That's ridiculous. So, at that point, if you're making $7,000 a week, selling covered calls on MicroStrategy, does it even matter if the price of MicroStrategy crashes back down to whatever, 2 grand or something in the next bear market? Because you're going to be selling covered calls on it all the way down. You can stockpile that cash. And then, 2 years later, mid-2027, maybe you can pick MicroStrategy up cheap again. That's all hypothetical. This isn't financial advice, since I'm not a financial advisor, but it's fun to think about. I got my fingers crossed in case Bitcoin does 10x between now and 2025, between the ETF and rampant inflation, which is probably 15%, whatever the official numbers are, complete bullshit. So that's, but even if it only falls way short of that, and Bitcoin only pumps to 150 or 250, that's 3 to 5x what it is now. So does that mean MicroStrategy will pump 3 to 7x, 4 to 7x? Sounds good to me. All right, be good, y'all.